Is my voice audible? Just give me a thumbs up if it is. So we're just going to wait a few minutes for Anhad to join us and for the rest of the audience who will be participating during this live session. So hello everyone, my name is Tarini Gupta. I am the co-founder of Dalalstreet.ai. Today we have a special guest here with us who's going to be joining us, and his name is Anhad Arora. We're just waiting on him for the next 1 minute and then we'll start the session. Till then, I hope everyone is having a relaxed Sunday. At Dalal Street, we're having quite a hectic one actually, post Independence Day. We have a game going on, which is our virtual stock exchange game called the Game of Stocks. So the team is quite busy dealing with that. Just waiting for a few more seconds for Anhad to join in, and then we'll begin the session with him. Just waiting on Anhad to join us. He is trying to log in. Hi Anhad, nice to have you here. I can't hear you. Can we just do a bit of a test before we start the session?
Yeah, can you hear me now?
Yes, much better. All good now.
Yeah,
Great.
good.
So, welcome to the Dalal Street Instagram page,
Hi.
and we are really excited to have you. Since we've been posting, about the session, we've got so many questions from the audience. So, I think this is going to be quite an interactive session. How's your day going so far? Your Sunday, Anhad?
Oh, pretty relaxed. I was actually going through the questions and stuff, so it's been based on this today. Otherwise, it's been a good day, yeah.
Okay, nice to hear that. Okay, so before we jump into the nitty-gritties of trading and what your kind of journey has been so far, I want to just ask you to give a short introduction to all our viewers here.
Okay, so I'm born and brought up in New Delhi. I'm currently 21 years old. I studied at the Vasant Valley School, and then I did my undergrad at St. Xavier's, Mumbai. My final year exam still on complete, so I won't call myself a graduate because, because of COVID, the exams didn't happen. Otherwise, yeah, since this session is about investing and trading, I started investing in mutual funds in 2017 and I got into the stock markets in 2019. So, yeah, that's about me.
So how cool is that? I'm sure you're just in the beginning of your 20s and you're already an investor, you're already a budding trader, and that's really interesting to see. I don't personally know too many people who are as heavily into trading and investment as you are at such an early age. So kudos to you. So I'm going to kind of jump into all the questions we've been getting from the audiences. And I
Okay.
just want to reiterate that this session is for people who are just about beginning their journey with trading, who might not have a lot of technical knowledge, and the entire session is dedicated towards beginners. So we are also hoping to get those kind of questions from the audiences. I'm going to begin with the kind of questions we've already been getting in, and then towards the end we'll open the floor to Q&A from everyone who's watching. So I'm going to start off with the first question, Anhad. What made you start trading and investing in the stock markets?
Personally speaking, like I mentioned, I started in my third year. So it all started off in college itself, right? So, in college they keep telling you to be aware of, if you're in a certain industry, you're supposed to know what's up. You can be studying fashion, you can be studying business, but You need to be aware of what's happening. And what would happen when I would read news is it would often frustrate me because, like, when you hear something from one year and take it out in the other, that's exactly what was happening. You would just read the article one day and, next day you don't know, like, you don't remember anything. So, my professor came and told me once that if you associate money to something, you're going to remember it better. So that really struck with me, like take for instance a football match in which you don't know the two teams which are playing, but one side you've put money, the other side you haven't. Of course, the game in which you bet, you're going to be watching it biting your nails. So there's no bone of contention there. So that really resonated with me, like I realized that how do you know about your industry? How do you know about brands? How do you know what's up in the economy? You invest in the stock market, right? So if you're directly linked to it, the headline is going to resonate with you on another level. And that's really important, personally speaking. So, I just don't read the headlines anymore. You need to know everything because your money is directly linked to it. So you can be from any profession, but if you want to know more about something and you need a drive, I think the stock market is a great way to do that. It's not only a way to make money, but it's a way to be very aware about things as well in any field. So that was one thing that drove me. The other thing that really struck with me was that, say you want to be a lawyer, you want to be an architect, you want to be a doctor. You need years of practice to get on the field, right? You can't just go to Max Hospital and be like, "Can I try out?" Like, that's not how it goes. So, but with the stock markets, everyone gets a chance on the same field. You don't need to have any degrees. It's not going to ask you where you studied from or what's your age. It's accessible to all. And that's what technology has given us. Both of these things are a very major blessing in that sense. So I definitely feel people should capitalize on that, that you don't need any degrees to be here, right? Not only that, the market is always there for you, right? Anytime, anywhere, any place. You can be on one part of the globe, but you can still access the stock market. So it's always there for you. If something goes wrong sometime, like how the recession was right now, things are still looking bad. A lot of people are turning to the markets and it's always there for you. So it's a very wise thing to always have the stock market there for you at the back. So, these two, three things really drove me. The first one was that you really get aware of what's up because the headlines directly impact you. Personally speaking, so since school, they've been showing us the annual budget, right? And each year I would just like watch it and not remember jack the next day. That's happened to me multiple times. But in 2020, when I saw the budget, I remember everything because I was directly linked to each segment of it. So, it's just a blessing that way to have. So that was that. And the second thing was it's there for you every time and you don't need any qualification to be out there and give it a shot. So these things really drove me to start. So yeah, that's that.
Okay, definitely. I definitely agree with you on that. But I just have a personal question out of interest. So you're just about finishing with uni. Was there any sort of kind of back training or any courses? Did you ever have any sort of education that taught you about the markets or how to go about trading? Was there any sort of influence on that kind of aspect, or was it something that you went out on your own and kind of learned about?
When it comes to that, I'd definitely say that my degree isn't in finance either. I was studying business management, though I did have a few subjects of finance and I had business in 11th and 12th as well. So I do have a bit of inclination towards it. But necessarily speaking, I really don't feel you need any of that backing. You could be studying anything and you can get into it. I feel YouTube is a beautiful place to learn and it's super underrated. I wouldn't even suggest paying for courses because I really feel some YouTubers are much better than most of the content creators out there. And that's facts, I feel that's very true. So what's really important, a mistake I made and I feel you shouldn't. There's no one to tell me about this. Like I said, I started mutual funds in 2017, and then I started investing in the markets in 2019. Now, for those 2 years, I was trying to build that prior knowledge which you just spoke about. But I can't deny the fact that, you can read as many books, but if you're not trying on the field, if you're not having your DMAT account open with you while you're reading and learning, it's going to count for nothing. And I can say I didn't make use of those 2 years. I should have had my DMAT open. So you don't need prior knowledge. You need to open your DMAT and you need to start trying stuff out, and then things follow for you.
Yeah, definitely. That was kind of the next question that I was going to ask you. So I totally understand now why you started trading and investing. But what was that first thing you did? Like, okay, you woke up in the morning and you decided today I'm going to start trading or whatever. What was that first thing you did?
Or after opening my demat or before that?
No, even before that. What was the first step you took?
First step I took was, like I said, I started investing in mutual funds in 2017. So I cashed all of them out and I got it to the markets. After I told you what drove me to start, once my professor hit me with that thought that, the news isn't going to be worthy for you if it doesn't affect you. Like, humans wouldn't want to know something that doesn't concern them directly. It's basic psychology. So that really drove me. So I withdrew everything from my mutual funds and I got it to direct investing. So that's what I did.
Okay, very interesting. So moving on to the second question, which was, do I need to have any prior knowledge? So you kind of did answer that, but is there anything else you'd like to add?
I'd definitely say don't overcomplicate it. You don't need to be a CA or a CFA level three or anything of that sort to get into the markets. So I'd definitely say you don't need prior knowledge. Of course, you'll have to give some effort, but that's about it. Like I said, YouTube has everything you need in today's world, anything and everything. So you will get through it if you don't overcomplicate it too much.
So, according to you, when one does get into this field, or when one wants to really learn, they have to be there on the field to kind of experience what it really is. So, you mean people should just allocate a small budget and actually start trading, and kind of get a feel of the market? Is that what you're trying to say? That's the best way?
Even if it's $100, $200, there's no better way to learn than being on the field. And this is one profession in which you're getting to be on the field. Like I mentioned in the start, right? You don't get that chance. If you're a doctor, an architect, or a lawyer, you have to work a lot to get there. But you're getting that chance here. Why not give it a shot? So, and India doesn't give it a shot. The two less people on the field. So that's that.
Yeah, definitely. So one of the main reasons that kind of drew us to starting Dalal Street, just a bit of a side note, but I thought it's interesting to let you know as well. We did a really in-depth analysis and research of the Indian market, especially when it comes to trading. And we realized that only 1.8% of India actually does trade. That's a really, really small number, out of what our population is like. And regardless of that, out of all the demat accounts that are present, 70% of them are actually inactive. So that indicates how many people actually want to start trading, but for some reason find a halt. They do make that effort to go create that demat account, but they're not able to move that step after. So
Yeah,
that was the main problem, and the gap which we were trying to bridge with the last sheet as well.
yeah.
So coming back to, sorry, yeah, you were saying.
No, I'm saying that makes total sense. That all adds up.
Right. So now I'm going to move back to the questions. And the next one is, how does one go about the process? How does one know if the markets are for them?
Um, if you want to go about the process, I think the first thing you should do is open up with a discount broker, not a full service broker. Your discount brokers are like Zerodha, Upstocks, etc. Full service brokers are expensive, especially if you're starting out like say Motilal Oswal or HDFC Securities. And that's how you start, right? Just open up with a discount broker. It's a matter of minutes. If your mobile number is linked with your Aadhaar, you're gonna have an account in your hands for $300 in minutes. Like that's not a very bad deal. But one thing I would suggest against in this process, so a lot of parents or grandparents, they always have their own brokers who used to take buy and sell calls over the phone, etc. Right, like the old school way. And a lot of people I know, they jump on that, like they piggyback on that broker. Like they use their family broker. I personally would suggest against that. If you have we're used to tech, we're from this generation. If you're not making use of that, then I don't know what you're doing. Like buying and selling is not a phone call away, it's a click away. So I really suggest that you open your own demat account with one of the discount brokers and not use a full service or your family's broker in this process. So you'll end up learning much more because when you have that whole interface, you have all of it in front of you. You're definitely bound to learn much more. So I definitely suggest that in the process. And what was the second thing you asked with it?
So the second one was, how does one know if the markets are for them?
Um, I think you just need one quality. for investing, especially maybe for trading as well, which is patience. If you are patient, and you know yourself to be, and you're not invested yet, you're losing money every day. You're not in the markets. That's like the opportunity cost. But if you're not patient, you panic, etc., then that's definitely a skill you need to work on, even generally in life, right? And you need it in the markets as well. So if you figure out your patience and level of panicking, you can figure out if the markets are for you.
Okay, interesting. So I just wanted to make a comment, in the first question that you were answering, where you said that don't just go for one of the old school ways of, getting a broker, or don't go by the advice of, someone in your family if they're using one. And I can say that I was definitely a victim of that. And that kind of halted my trading process for a good year because I just couldn't understand what I was meant to do, how my role came in, what I was what it even looked like, forget anything else. And I think I was 1 year late to the game just because of that reason. So I definitely support you on that one.
Yeah.
So the next question is tips to any first time traders or investors of your age who is just about starting off.
Um, when it comes to tips to a first time investor, I didn't have anyone to guide me, so I made a lot of mistakes. So now I'm really good at giving tips for that reason. So don't make the same mistakes. I think one of the most important tips that I can give is that don't invest in the stock price, invest in the company. Okay, this is very important. Just because something looks cheap doesn't mean you buy it. Okay, like that's a big no. Yes Bank looked cheap. People bought it. Look where they are. Something like a Reliance Communications looked cheap. You bought it because the stock price looked cheap, and look where it is now. It's very important to buy into a company and not the price associated to it. If you believe in the company and don't look at the stock price, you're going to do wonders. So for that matter, like people who invested in Yes Bank, okay, the stock price looked cheap, but look at the company, right? The promoters are running away, they're selling their shares, they're taking more loans, and they're cutting their cash. How basic is that a sign for leaving, right? So it's very important that you don't just look at the stock price, just because Yes Bank is for 13 rupees and you see it all around you as a very fancy bank, that doesn't mean you go out there and buy stock of Yes Bank. Because if you look at the company, it's doing blunders. So that's very important that you understand that you invest in a company and not the stock price. One really important thing, also as a second tip I would give to any first time investor, I've been prey to this, is listening to all the analysts, the brokerage houses, and the list just goes on, like in a way, the analysts, etc., all of the big fish, they're all there to trap you. Us as retail investors were the small fish. So take Reliance, for example, right? I'm sure everyone here has read that Mukesh Ambani is the fourth richest person on the planet right now. But if you're in the markets, you've seen that happen in front of your eyes. Now, say Reliance was for 1400 before the pandemic happened, and it recovered back to 1400 within a month or two because of the deals Geo got. Now, what happened was any news channel you'd put on, at 1400, the analysts called it expensive. At 1600, they called it expensive. It reached 1800, they called it expensive. Now it's 2000, they're still calling it expensive. You know, so if you invest in the stock price, you're just going to be a spectator. So I'd heavily suggest you not be a spectator in the markets. Now it's at 2100 and he's the fourth richest. If it reaches 4000, he's going to be the richest person on the planet, and then they'll say it's expensive there as well, right? So I'd heavily suggest you not be a spectator in the markets. You have to at least put in your first installment or put in a small amount, and then if it falls, buy more. So don't fall prey to analysts, etc., telling you that it's too expensive, or brokerage houses giving their targets. Very important to cut that noise. So I'd really give that suggestion that don't invest in stock price, invest in the company, like I suggested, Reliance. Okay, it's for 2000, but Geo is there, and you've seen our population, you know how much it can grow. So don't look at the price, look at the company. So that's a very important tip I'd give to anyone starting out. I had made these mistakes myself of investing in stuff that looks cheap, and not looking at the company.
Right. So I do you mean to kind of say, you can correct me if I'm wrong, but even though something like investing and trading is not impossible, there's still a lot of analysis that goes into it. You still do require some amount of experience in analyzing the stock, analyzing the company, the performance, things like that.
There's definitely a barrier to entry, of course. It's not going to be that easy. But it's definitely something, it's definitely a skill you should work towards because, like I mentioned, it's always there for you. Like it goes into your muscle memory eventually. Once you get it, you get it. So it's very important that, you overcome that barrier and you can do it without spending anything on courses, etc. That I can assure you. So I think that is a blessing in a way.
Okay, interesting. So let's move on to the next question. How to decide what should be your first stock?
Okay, so that's a very wide question that, what should be your first stock. But I can definitely tell you what not to buy so you don't mess up too badly. Personally speaking, when I started, my first stock was a company called Jain Irrigation. It was for like 7 rupees. So what I'm trying to say here is that don't buy cheap stock when you get out there. Everyone thinks that they'll buy that 2 rupee stock and it's going to be 20 rupees next month and they're going to go home happy. That's not how it goes. If you want to buy penny stock, you might as well go to the casino, or you might as well. It's as good as gambling. There's no skill involved in a penny stock. So I definitely suggest against starting off with any penny stock and start off with a good company that you are aware of yourself. Do not buy penny stock because it'll really frustrate you. At the start, it almost ended my journey as well because it's really frustrating, how they work. It's completely manipulated when the stock price is that small. So don't buy penny stock when you're starting off, is what I'd say. If you really want the first stock you should buy, I can't pinpoint any for you, but for surely, I mean, look at the FMCG companies in India. They're all around you: HUL, Nestle, Britannia, Dabur. You can blindly invest in any of them for the long run. So that's the only suggestion I'd give.
Okay, interesting. So, what are some common traps that make people not want to participate in the markets? I know you've kind of touched on to a few points, but we can just kind of sum it up and you can add a bit more to this answer.
Um, I mean, a lot of people also commenting about not having money to invest. And that's something a lot of people say, right? I don't have money right now. I'll start later. But I'd sent you a visual on compound interest. Can you
Yeah,
just
I'm sure I'm just going to do that.
so is it visible? Yeah. So this speaks volumes. So there's two lads over there. One guy invested $1,000 for say 10 years, and the other guy invested $1,000 for 30 years. Okay. And the person who invested for 10 years from 25 to 35 is richer than the person who started off at the age of 35. So it's very important for you to know that even if you have a small amount, it's going to compound. And the earlier you start, the better it is. Like you can see it here. One person has invested for 10 years, the other has invested for 30, the same amount. But the person who invested for 10 years has a wealth of 150K and the other guy has 120K. So the second guy invested more and he earned less. That's just the power of compounding. I mean, how else do I explain it? So you know, if you say you don't have money, etc., whatever you have, begin with it. Like you need to put in a small amount because things compound, right? The stock market simply isn't just the stock price moving. You can get a bonus, you can get dividends, a lot of things add up. So that's really important that people understand that, just not having that money you expect yourself to be putting isn't there right now, but you need to start. And you can see here the earlier, the better, right? So that's one thing. We can cut this picture now. I think
Sure.
this should be clear. And besides that, a lot of people, so you get leverage in the market, right? Like if you have 100 rupees with you, it's worth 1,000 in the market if you're doing intraday. That's very important to understand. Now, that's a boon and a bane, like don't get trapped in that because say you have 100 rupees and the leverage on something is 10x, that means you can actually buy 1,000 rupees worth. But then when that 1,000 rupees worth goes down, you might lose your full 100 rupees. That's very important to understand compared to just that 100 rupees going from 100 to 90. it can go from 100 to 0 just because you use that 10x leverage. So if you get experienced and you study a lot and you have less money, you can use leverage to your advantage, but don't get trapped in it, because like 1 rupee equals to 10 rupees in the market, for each stock it's different, but people do get trapped because of that as well. But if you learn how to use it well, it can actually be very effective for you to start. So that's a common fallacy people have that, you don't like, you get a leverage. So that's very
And
important.
yeah, and tell me, Anna, just on a quick side note, you've been trading for about how long now? How long would you say?
So I started in October 2019, but I
Okay.
really started trading properly in March end when the pandemic started because I had all the time in the world, right? You have to be
Mm.
in 9 to 3, so that's when I really started.
And tell me, what are the, just one or two benefits that you noticed within yourself, personally, financially? What are the benefits of trading? What
Oh,
that you have personally experienced?
I think a lot of things start to make sense for you, especially the patience aspect. Like a lot of people say good things take time, etc. You kind of see that playing out in the markets. Things aren't immediate. You have to be very patient. You learn a lot of qualities that really help you otherwise as well. And another thing that really helps is, it also builds sort of a discipline. Like you're more timely with things because, it has a set time and it does develop a certain discipline in you as well. And most importantly, it teaches you how to take a loss. When the pandemic started, around March 23rd, March 25th, say if I had hypothetically invested a lakh, I was down 30, 40,000, and you have to be used to that. It really teaches you to take a loss, but you do bounce back. And, now the market is back and how, so it's really important to understand that, you learn to take a loss and you do wait to bounce back. It's really important to get that in any sense in your life as well. So I think the markets really taught me that.
Okay, very interesting. I think that was important for everyone to kind of hear as well. So we are kind of done with the questions that we received prior to this session. I
Okay.
just have one question for you, a sneaky little question.
Okay.
But you have access to our platform and you kind of had a look at it. And
Yeah.
what are your thoughts on that? How do you feel like our platform, Dalalstreet.ai, would be of benefit to someone, especially a beginner, because we kind of are focusing on beginners today. So just in light of that.
Definitely, since it's in its first version, I think it's a phenomenal product for a 1.0. I mean, considering by the time it comes out to the public, it'll be much more polished. But one thing I can say for sure is that, compared to a big fund house or any analyst, when you're getting calls from someone from your generation, someone who's trying to promote the cause themselves for retail investors, I think that really appealed to me about the Lal Street area. And I think once the product is out, and if it can drive people like it is right now, because it also, like you said, you also want to be an educational platform, for people to also learn. So getting both those helping hands, that's a big blessing. So that's what I'd like to say. I
And
think,
what are your thoughts on, we're using AI, we're using
yeah.
artificial intelligence to make these calls. What are your thoughts on that?
See, definitely if you're doing intraday, it has to be algorithmic, right? Because you're giving calls every 30 minutes. For someone who wants to be on the flow that day, he can have a wholesome day, right? Giving 30 minutes gap, you're getting a call each time. So, if it works well, you can make a good 10-20% in a day because you give buy and sell calls every 30 minutes. So, that really accumulates. And if someone really wants to get into it, getting those calls every half an hour, in the start, you'll be taking it from the algo, but eventually you might start doing it yourself, so you'll fly off yourself. So that'll be really nice to see if we can have some conversion from people who didn't get it and they're using the algo and now they're doing it themselves, right? So I would love to see that transition happening because of the frequency of the calls.
Okay, nice to hear that. So, Anand, do you have anything else you'd kind of want to talk to the audience about before anything that we missed out on before we move on to the Q&A with the audience around us right now?
Um, I just had to sum it up. Patience is really important. And if you're already a patient and calm person and you're not investing, you're losing money each day. You're not investing, like I mentioned. Another thing, you don't need any qualifications. You can open your account overnight and, give it a shot. Like, why not? What if it clicks for you? You have a backup for you at all times. So I think these two things are very important. And last, summing up kind of thought, the thing I mentioned about don't invest in the stock price because it's cheap. Invest in companies you believe in. And then I think you do wonders. And I think last note, a lot of people are you hear a lot of people saying, I lost all my money in the markets and, all those things, it's too risky. But, there's risk involved with everything. And to be very frank with you, you don't lose all your money overnight. Neither are you going to make your money overnight. That's not how it works. So you get enough signs to exit early. You're not going to lose all your money if anyone has that concern. If you invest in the company, even if something goes wrong, you have enough chances to exit. It doesn't go from 100 to 0 in a day. It's very well regulated. So these things are very important for you to note, if you're starting off. So I think I like to end it there in
Okay.
terms of.
Cool. Thanks for that, Anhad. So I'm going to request you only because we have a bunch of questions and loads of comments. So I'm going to
Yeah.
request you if you can with me kind of scroll through all of them right from the top. And whichever ones you do feel like you'd like to answer currently, we can answer them now. If we do miss out on any questions, we will be more than happy to kind of link you with Anhad and he can answer the questions for you. So just Anhad, scroll all the way to the top and whichever questions you do feel, please, answer them right now for the audience.
Good. Uh, so I think the first one I'm seeing is what technical indicators can one start with? So I don't want to get into too much of jargon because we're appealing to audiences from all backgrounds and doing different things. But basically, I would suggest keep it basic. Keep one lagging indicator and keep one lead indicator. So lagging indicator is one that works more on past price, and the lead works more on future. So a combination of
Anhad, sorry, we're kind of losing out on your voice.
yeah, can you hear me now?
Yeah, much better.
Yeah, so I was saying, so you should use one lagging and one leading indicator and keep it really basic. So I would suggest a combination of MACD, RSI, and a couple of moving averages. I'm looking at the other questions. So a lot of people are talking about not having commerce, etc., in 11th and 12th. But like I mentioned, you don't exactly need a business background to be doing this. There's enough to support you regardless. And if I can see any other questions, I think, okay, so I guess last one I'm seeing over here, I think that's the last one I'll do. It says, how is a moving average correlated to the stock? So the only thing you need to know about moving averages, if I had to put it in a short word, is if you're looking to invest in the long run, look at a simple moving average. And if you're looking to invest in a shorter term, look at an exponential moving average because that gives more weightage to the previous few days than the past. So if you're talking about moving averages, it's simply a sum of the stock price divided, the closing price is divided by the number of days. And I think one last question someone's asked about what are the financial indicators you look at when you're investing? So keeping it really basic, last question I'm taking. Don't invest in companies that are increasing their debt and reducing their cash. That's a big no. And another very basic thing anyone can see is if the owner of the company themselves are selling their stock, that's a big reason to not enter. So these two things are very basic, and that's something everyone can do. And you should always keep this in mind. So I think that's all from my side. I can't see more of the questions right now, and there are too many, so I can't take all of them.
Yeah, I know. I've kind of also been just seeing how many we've got. We've got a really great response, and I kind of just want to end by saying that I've noticed that there are lots of questions on how one should go about, fundamental, technical, sentimental analysis. And
Yeah,
for those of you who don't kind of know what Dalal Street is, but at this moment we are providing an advisory platform that does all of the analysis and based on our AI does all these forms of analysis and then gives you a recommendation when you should buy or sell your stock and at what price. So we are currently at our beta version right now, and we are testing it. We have a handful of people who are giving us feedback. We're molding our product to perfect it. And yeah, so that's what we are doing. If any of you are interested to test it out, to understand better about what we are doing, please do apply for our beta on our website, Dalalstreet.ai. And yeah, that's really all from my end. I think we've had a really great session, very interactive. We've had a great response. For anybody who's missed out, this is going to be part of our IGTV. And yeah, Anhad, I think the concepts of investments, trading, finance can be kind of like gibberish to a lot of people. I know that
Yeah.
till I was at least 16 years old, it was all more than gibberish to me. So thank you for kind of clearing it out. And what does resonate with people most is personal experiences, and that's why, because I've recently just graduated from uni. I also wanted to get someone onto our platform to talk about their experience as someone in their early 20s. So
Yeah.
I think this is the best way to kind
Um,
of let
one,
people. Yeah,
I want,
sure.
I forgot to mention this. So, when I tell a lot of people to invest and they hear the returns of maybe 15%, 20% a year, it doesn't sound very lucrative. And of course, that's the power of compounding issue I mentioned. But, just for an example, so like I'm sure everyone knows the IT major Infosys. So if you had invested around just 950 rupees when Infosys listed in the mid 90s, and I ask people how much would it be worth, the max figure someone would say to me is 7 lakhs, 10 lakhs max, but your 950 rupees invested maybe in 1993 or 94 when it listed would be worth over 50 lakhs right now. So, that's not going to happen with betting or, anything other than this investment option you have. 950 rupees are not going to become 50 lakhs from any other investment machinery in the world. So, I think I would like to close it at that. That just sort of gives you the importance of starting early and holding on to it. So that's what separates it from other investment options, simply stated. So yeah, that's about it.
Right, awesome. So thank you so much for, coming on a Sunday and talking about your experiences. And, if anybody does at all have questions, I'm sure Anhad, you'd be very open to kind of answering them at any point.
Yeah.
We are in touch with Anhad, so if anybody does have, please feel free to message the Dalal Street Instagram, and we'll, get you connected with Anhad. So thank you so much for everyone who's watching.
Much
We
and
have kind of gone over time now. But let's close it here, Anhad. Thank you so much for being here again. Bye, Anhad. Take care.